You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means it is time once again for TWIFO. This Week in Futures Options, a program where the name says it all. We break down the week that was and indeed still is on the commodity and indeed the futures options side of the fence. Maybe we'll talk some ag, some energy, some metals, some indices. You never know where the heck we're going to go. That's why you have to tune in every week here on TWIFO. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting network. Reminding you, if you like what you hear, keep those reviews coming. Wherever you listen to this show, it's available pretty much everywhere. And, of course, keep those questions coming, too. We do love to hear from you guys. Let's see who we're going to hear from on the old show today. First off, we are joined once again. I am pleased to say he is back, holding down the FTSE Russell hot seat once again, Mr. Sean Smith, the Managing Director of Derivatives Licensing over there at FTSE Russell. Mr. Smith, welcome back to TWIFO, sir. It has been too long.
Thanks, Mark. Great to be back. Looking forward to having a great show today.
Have you recovered from our epic election night spectacular, sir?
No, I haven't. I think everybody's saying it's over, but I'm like, there's still some uncertainty out there, bringing some volatility to our market that continues.
But of course, unfortunately, due to weather concerns, there are some issues down there in the Gulf, of course. It's crazy hurricane season that we're having down here. We'll have to postpone our guest for this week. So no one in the CME Group hot seat as we head right on into the movers and the shakers.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers Report.
All right, everybody, let's do it. Let's get things going. See what the big movers and shakers were this week on a crazy big week, pretty much over there on CME land. Just about you pick the market. It's been moving and shaking. Nice thing about this week, though, a little bit more evenly split than last week. Last week, of course, it was pretty much, you couldn't even build a bottom five. You couldn't even build a dark side five. Everything was green. This week, it's a little bit more split, which I think is a little bit more interesting from a market's perspective. Let's start. Mr. Smith, you haven't been on a little bit. I will let you choose. I think I know where you're going to go. But where should we begin our journey this week, Mr. Smith?
You know exactly where I want to go. Upside, please.
All right, let's do it then. To the upside. Number 9. Let's go outside the top 5. Number 9 is where we find the Russell 2000, a rare week where it has not blown the doors off to the top 5. Still up 4.05%. Just shows you how aggressive some of our big top 5 movers are this week. Number 5 here to the upside, we got live cattle up 6.18%. Bitcoin just barely edging it out, up 6.19%. If you're wondering, it was number 3 to the light side last week, up almost 9.5%. And then we've got iron ore at number 3, up 6.5%. Then we've got number 2, heating oil, up 7.35%. And Mr. Smith, our old friend WTI, feeling its oats this week, up 9.15%. It was number 5 in this direction last week, up 7.8%. So it's been a good couple of weeks for WTI. We may have to begin our analysis there because a lot of stuff popping off there in WTI. But before we do that, let's go to the dark side now. Number 5 to the dark side, the old Ultra Bond, off 2.68%. Number 4, silver. We were just talking about silver on our option block program. Check out what we thought of some interesting trading ideas out there if you're so inclined. Number 4, silver, off 2.98%. Number 3, gold, off to the metals, off 3.45%. Numero dos here, the Eurodollar, off about 4.88%. It was number 3 to the dark side last week. And then number 1 with the bullet this week, bad week for Class 3 milk, off 21.75%. So a bit of a drubbing out there in the dairy land, which is kind of interesting. Sean, though, I think we may have to start our analysis in WTI. What do you say, sir? Because it's been rocking and rolling this week, and it's back above the much heralded 40 handle. What do you think, sir?
Let's do it. Let's talk crude. Not crudely. Crude.
I was going to say, are we going to get crude about crude, sir? I know you like a good pun or two on this show. All right, let's get to it.
It's time to tap into the deep options well of black gold, Texas tea, nat gas, and more. It's time to talk energy.
You guys know where to go to find this information for yourselves. CMEgroup.com/TWIFO, TWIFO, which is, of course, the name of the show, or /TWIO. They also put that in there, which is this week in options. So if you can't be bothered to add the F, either way, they got you covered over there. Then you get on to the drop down, go to energy, go to WTI, and you can follow along just like we're doing right now. And as I mentioned there, WTI is north of the 40 handle yet again, 41.14. Coming into Showtime listeners, that's a big move. Like I said, it was up quite a bit since our last show, up 9.15%, up about 10.75% since the start of the week. So it's had a really strong rally here coming into this week. The most active contract out there is the DEES contract, which has a whopping 5 days to go. But still, it did 45% of the paper out there. You know, I'm not a fan of analyzing skew and everything else like that when it's so close. Let's go a little bit farther out. A contract that was also still pretty active, the Jan contract. This has a more respectable 34 days to go, and it did about 30% of the paper this week as well. So we can hang our hats out there for a little bit more sane analysis of vol and skew and everything else. By the way, the vol, remember I said not too long ago this vol was topping 60. It was north of 60 out here. It was more volatile than Bitcoin, more volatile than most of the major assets you're probably trading out there. It has come off quite a bit yet again this week. Came off last week, and now it's come off again this week. It's at about a 46. That puts it off about 8.25 points from this time last week. So a lot of vol coming in. Still very frothy. 46 volatility is fairly high out there. If you watch WTI, you know that's a pretty juicy bit of vol, but still it's well off the extremely, some might say absurd, lofty highs we saw out there from a vol perspective. Let's look at skew. Let's see, out in Jan, the puts were 19% rich last week. This week, 22.5%. So puts getting more bid. Again, not surprising. That's one of the questions I wanted to answer. I'm sure one of you guys are asking as well. Is the market still fading this thing north of the 40 handle? That's been pretty much the play every single time it has rallied. The market has faded the hell out of this thing. Let's see if they are doing so again this week. So far, looking pretty good on the put side. Let's look at the calls. 13.2% cheap last week. This week, 17.6% cheap. So getting more aggressively sold. Some of that could be the rally as well. That's usually what happens when you move up the skew as well. If you want a detailed breakdown of that, I encourage you to check out the report and check out the shifting and the sliding here on, looks like a lot more sliding than shifting this week, which also would make it seem like it's pretty much staying glued to that skew path that is laid out for it. Not that much shift at all here in Jan. So it's mostly looks like a lot of the paper as well as just moving up that skew chart that is causing those calls to come in and those puts to get bid. Let's see what the most active contract is. It has have to go back to the DEES contract for that. That's going to be the DEES 42s, 18, almost 19,000 contracts on the tape out there. By the way, if you're wondering, let's just look really quickly. The puts were 11.6% cheap last week, or I should say rich. This week, 18.5% rich in DEES. Calls, 8.2% cheap. This week, nearly 16% cheap. So exactly what we saw playing out in the Jan contract, just even more pronounced. So yes, they are fading WTI once again north of the 40 handle. So the big question everyone's asking, is the options market fading this rally in crude? And unfortunately for you crude bulls out there, it seems like the answer is still a resounding yes. Let's see. 42 calls were active. Also looks like actually 45 calls might be taking the number one with the bullet spot here this week with about 19,700 going up in. This is back in DEES. The big day yesterday, 7,000, 6,000 on Monday, 4,300 on Tuesday, only 1,900 today. Followed by, looks like the 42 calls that we just talked about with about 19,400. So 45 calls edging them out ever so slightly. And then let's see, we drop down to the DEES 43, 17,400. The big day also on Wednesday for those. Actually, take it back. The big day was on Monday, 6,500 going up out there. Followed by the 33 puts with about 17,000. The big day of those was actually on Monday, 16,700 trading on Monday. So this was kind of in the immediate blush of that news about the vaccine. Everyone and their mother was coming out. Crude was rallying, and these guys were crushing these puts, and so they were obviously taking them off. It seems like most of those were closing of that 17,000. So, yeah, some folks maybe, at least in the interim, it's kind of hard to blame them. The stocks are rallying. Crude is rallying. It seems like we might have a vaccine on the horizon. It's kind of hard to maybe merit keeping that DEES 33 position on, particularly only has a few days to go. So they took a lot of them off at the beginning of the week. Kind of hard to argue with that one. That's probably what we saw, despite the fact that the puts are still bid out there, which is kind of interesting. All right, let's look really quickly. We talked about the Jan contract. Let's see what's going on in Jan. Jan 40 puts were the big dog out here. Again, not surprising that that's the most active contract because 40 strike is where people like to hang their hat. That's a very even money strike they can wrap their heads around. And those were opening pretty much all week long. 2,700 on Monday, about 5,000 on Tuesday, 6,600 yesterday, about 2,000 on the tape today. Opening all week long on the 40 put strike. That is kind of interesting. Again, probably explaining why we saw a little bit of bid creeping in to those puts out there in January. So interesting stuff. Let's look a little bit farther afield to see if there's any weird paper on the tape out here, any extremely bullish or extremely bearish strikes. The 50 calls, pretty active in DEES of 2021. About 6,000 on the tape this week. The lion's share yesterday, 2,300. So about half of them yesterday. 1,700 going up today. So pretty active and mostly opening throughout the week. So someone opening. So I shouldn't say it's all fading. Of course, this guy could be overriding these. I haven't had a chance to dig into these. Let's look at the skew really quickly. Yeah, it looks like the calls are a little bit off this week. But again, 50 calls. Could be someone out there playing a little bit upside, thinking, if we do have a vaccine, this time next year, demand could kick in. We could have a summer driving season. People will actually be buying crude. Planes will be in the air again. And so this guy obviously looking maybe for a little bit upside if he is indeed long that 50 strike out there. Interesting stuff. We could probably talk crude for the rest of the show. But now we got to roll on in. Sean's back. He's rearing to go. Let's get into a little bit of the old equities.
It's time to explore the volatility swings, skew changes, and hot options trades in your favorite indices. It's time to talk equities.
I love that bumper. Let's do it. Let's talk equities. Mr. Sean, I will set the table for you if you would allow it, sir. Let's kick it off on the vol side of the equity space. Coming into showtime, Sean, actually, interestingly enough, we talked about the up and downs, the back and forth of small caps. RVX, which is, of course, the VIX of small cap, exactly unched from where it was last week. It was about a 32 last week. It's about a 32 again this week. If you're wondering, listeners, that's about a little over 10 handles, about 10 3/4 handles below the high it hit not too long ago, 42 3/4, staying even at about a 32 this week. So small caps staying frothy out there. Of course, a little bit of today's sell-off probably helping that out there. VIX cash coming into showtime is at about a 25.5, puts it down to almost 2 1/4 handles from where it was this time last week. The VVIX, which is the volatility of all this volatility that we're talking about, that's ticking up. That's at about 121.5. That's up about 2.5 handles from this time last week. And our newest addition to the volatility landscape, aka VolQ, if you want to deep dive into that, we did that on the show last week. Check out that episode if you missed it. Is that a 27 3/4 coming in to showtime? Puts it actually a little bit down from where it was this time last week, down about 1.5 handles. That VIX RVX spread, so the large cap to small cap vol spread, is about 6.5 points. That's widening out again, Sean. It's about almost 2 1/4 points wider than it was this time last week. And again, it's not quite apples to apples. I called it apples to tangerines on the show last week. Tim McCord had a different perception of it because it's not quite the same thing. VolQ, of course, just at the money NDX options versus VIX, which is kind of the whole strip of the S&P options. So a little bit different beast there, but still that VIX, so that large cap to other large cap, but more tech heavy, perhaps, name spread. So the Nasdaq to S&P 500 spread at about 2 1/4 points. So Nasdaq still juicier, which again is probably why they wanted to launch a volatility product on it. It's an inherently more volatile index. But that said, Sean, a lot of things have been happening in your neck of the woods. Small caps, Russell 2000, rallying 4% just on this Monday alone. Of course, that was in the wake of the big vaccine news, hitting a new record level for the first time since August of a couple of years ago, August of 2018. A lot of people are pretty excited about that, Sean, because we've been talking for a while about, large caps, big tech names, and the rest of the market kind of languishing. If small caps are playing now, too, that maybe shows a bit of a sign that the economy may be having a little bit of a broader improvement out there. So, Sean, I know you've been away for a little bit, have a lot of time to analyze and percolate and indeed ruminate on the small cap space. What has been lighting up your tape, sir?
Well, it's just really interesting to see small caps rally as tremendously as they did this week. We've got the spike in the COVID happening as well, which is, I think, making the market breathe here again as well. But with the recovery, I think most of the volatility out of the election at this point bodes well for these U.S. domestic small cap stocks, of which when you mention COVID vaccine, and you've got a heavy weight of healthcare stocks, which are in the Russell 2000, you're going to have a rally like this. So it's an interesting market, interesting rally. Volumes have been tremendous. You brought up the election evening during our call, and I don't know if Tim mentioned this, Thunder, but they had record overnight volume in the Russell 2000 the night of the election. They broke their all-time overnight volume records in the Russell 2000 future and in the micro. So really cool to see, very exciting to see, tremendous liquidity in the off hours, which means the world is trading the product. There's a real global interest in trading U.S. small caps as an investment vehicle using the Russell family, the Russell 2000 index as that benchmark. So it's exciting to see. Yesterday we had a webinar that we did with our partners over at SIBO Global. The webinar consisted of our Catherine Yoshimoto, who's been on the show a couple of times now, a very interesting lady from Wilshire. Wilshire had written a couple of white papers on small caps and talking about the marketplace and the volatility and what causes it. And then Derek Devins, senior portfolio manager at Neuberger Berman, talking about implementing option trades to take advantage of the various volatility opportunities there are to trade the Russell 2000 options. So it was a fantastic webinar. And as I'll recap again at the end of the show, I'll make sure you get a copy of this, Mark, to pass out to your audience. But it was a fantastic webinar, very informative in terms of what drives small caps, which sectors and weights are driving the index and its performance this year. We had, during the election, when we went back and forth with Dan Graham's on the show, and he was talking about, if we could stay above that 1600 level, that's an indicator of the fact that small caps are going to continue to perform. But we blew through that 1700 level. So it was a big move this week. Very exciting to see. Just a great week for small caps. So looking forward to seeing more volume, more open interest, and more trading.
Anecdotally, it does seem like this move recently has garnered a lot more interest from different areas that I haven't heard really talking about small caps in a while. For example, in our own neck of the woods, on our network, our Options Playbook radio program, that host there, Brian, who was on our Election Night special as well, he just did a whole episode playing small cap volatility with Russell 2000 back spreads. That was his episode for this week. We had Matt Amberson, who does a lot of analyzing and crunching of the numbers, also talking about what's going on with this resurgence out there in small caps and the volatility out there. So I'm hearing a lot of different areas, Sean. I don't normally hear talking about small cap and small cap volatility all of a sudden fixating on it. Are you starting to see that as well, Sean? Absolutely right.
We're getting comments from and we're getting folks in all stretches of our ecosystem commenting on the performance of small caps as of late. So it's exciting to see. It's an important benchmark to us here at FTSE Russell, along with our suite of product. But yeah, the Russell 2000 has been on the forefront for quite some time here. It's exciting to see.
Let's see what's on the forefront from a trading perspective. Go to that drop-down, listener, switch to equities, pull up the Russell 2000. You'll be off to the races just like us here. It looks like DEIS was in the driver's seat this week, 37% of the paper. That has about 35, almost 36 days to go in that contract. If you're wondering, we talked about the RVX out there, what the actual DEIS at the money vol is. It's about a 28 even, up about 1.5 points out there, which is kind of interesting. That's a little bit below what we were saying with RVX, which is a 32, which looks like that's more obviously, given that methodology, more tinged towards the front portion of that term structure. And that's a little bit juicier, a little bit more backward than the comparatively saner DEIS contract out there. Let's see what the number one with a bullet trade out here was. It was 1710 calls. We're at about a 16, just a tick under 1,700 coming at showtime, Sean, about 1699.30. So 1710 calls. I mean, it doesn't seem like that long ago we were talking about 1,600. Can they make it? Can they surpass it? Spoiler alert, yes, and threatening 1,700 right now as the show is going on here. 1710 calls, the most active trade out here this week. Let's see really quickly. Puts, interestingly enough, the exact same level of bid this week as they were last week. 15.6% rich last week, this week, 15.6 as well. Calls, 10.2% cheap last week, last week they were 10.2% cheap. This week, 11.8% cheap. So calls getting a little bit cheaper. Puts staying exactly where they are, hovering around that 28th vol, we said, for the at the money out there in D. So we have a lot of contracts making records and new highs and all sorts of levels this week. Sean, what do you think next? Because we saw such a crazy just apocalypse for it this week. What do you think, Mr. Sean? We hang our hats in the shiny stuff next, sir. What do you think?
Let's go. Let's do it.
Werewolves beware. It's time to explore the options activity in silver, gold, and other shiny things. It's time to talk metals.
All right, listeners, you know what to do. I'm doing it right now. You can follow along live. Head on over to the metals drop down. Go to precious metals. Let's go to gold. Because gold had some interesting movements, shall we say, this week. On Monday, gold had the worst daily loss in over 7 years on the futures. That's the largest one-day dollar decline and also percentage decline since 2013. We all know why, of course. That was the day that the news really hit the markets about this efficacy of 90% in this COVID vaccine. Gold, of course, not exactly the type of product you want to have during calmer, better upside markets. And we saw that reflected out there in the gold futures as a result. Let's see really quickly. Interestingly enough, it's such a crazy week. That was number 3. It was 3 off, ended up only off 3.5% from this time last week. But interesting stuff nonetheless. From the start of the week, it's off nearly 4%, 3.94%. Of course, obviously, most of that bad news came at the beginning of this week. Gold coming at showtime at about 1875, so well shy of that 2,000 strike it was at not too long ago. The most active contract also in DECE. It's got about 12 days to go. It's right around our barometer, so maybe I'll make an exception out here, and we'll look at that. It's got about 35% of the paper. By the way, if you're wondering, gold doing almost 250,000 contracts this week, so a pretty active week out there in gold. But again, you'd expect that given the fact that we have record losses there on Monday. The at-the-money vol out here in gold right now in DECE, 15.25. Let's look a little bit farther out. Let's go to Jan just for curiosity. That's about almost a 17, 16.82. Either way, both of them coming in. Now that might surprise you because you think, oh, big sell-off. Vol should pop, but that's an equity mindset. Remember, listen, that's what we see mostly in equities. Vol bid to the downside, offered to the upside. In commodities, different bag. And that's what we're seeing out here in gold. And now, of course, the election was also a big event risk that was being priced into products like gold. With that event behind us, we're seeing that volatility come in as well. So 35% of the paper going up in DECE out here this week. The puts last week, 3% rich. This week, 4.4% cheap. Interesting. So a big swing out here in the puts. Obviously, when you're blowing through a bunch of strikes like that, like we are this week, gold is off almost 77 handles just this week alone. So when you're blowing through strike after strike like that, listeners, eventually you're going to blow through the strikes people have. They're going to take those puts off because the hedge is working, the trade is working, and that's going to show some of those strikes starting to come in, unless it's a really just exponentially big move, which actually was earlier this week, but I think maybe some saner heads have prevailed later on in the week, which is why we're seeing these put strikes actually come in a little bit. The calls, 0.5% bid last week. This week, 6.1% bid. So calls getting a little bit of a lift. But again, this is a near-term contract. Let's go out to Jan, get a little bit more time on the radar. Let's see how that impacts our skew analysis. Jan, 1.3% rich were the puts last week. This week, 4% cheap. So same deal. Puts coming in aggressively in Jan there as well. Calls, 1.8% rich in Jan last week. This week, 8.1%. So calls even more bid. Puts a little bit less offered. Similar exact skew movement, though, in Jan that we saw out there in D. So interesting stuff. Number one, the bullet this week, you can probably guess it, the 1800 put, doing about 7,000 contracts out here this week in the DECE contract. That's number one with the bullet. The big day was Monday, 2,400 on the tape, and then about 2,000 yesterday. Only about less than 1,000 going up today. Back and forth looks like on both of those days. You think it'd be biased in one direction or the other, but actually doesn't seem like the OI changed that much after these trades went up. So kind of interesting. A lot of back and forth churn and burn on the 1,800 strike out here, followed closely by the 1,900 strike to the upside. The big day for that was Tuesday with about 2,700 contracts. Slightly biased towards closing there as well. You know, in gold, though, we like to look farther out. That's where some of the fun paper lurks. There is some upside lurking. 2,100s in February of next year, doing about 3,200 this week. 20 half calls in Jan, doing about 6,000 this week. 2,500s a little bit farther out in DECE of next year. Only doing a couple hundred. That isn't that many. And then I know we have talked about some very strange strikes in the past. Don't see a lot of those unless you count this one lot of the 3,500s next year in October. Other than that, not too much going up, which is interesting. Usually you see on a given week, and especially not a crazy week like this, you'd see some sort of, around the 3,000 strike, 2,500, something like that, and yet not a lot of it on gold. So maybe a little bit more subdued week than I expected, given the headline-making news we saw earlier in the week out here in the metals. Let's look here really quick. Well, Sean, I'll turn it to you, sir. where should we turn our analysis next, sir? Where should we unleash our gaze to parse what's going on in the world of futures options next, sir?
We had Craig LeVay on last week or the week before. Why don't we talk foreign exchange in honor of a fantastic visit with Craig last show?
In honor of Mr. LeVay, I think we can do that. So, listeners, you know where to go. Pull that drop down to FX majors. Let's go to the big dog. Let's go to the Euro USD. I think we have a question about FX maybe a little bit later, so see if we can work that in as well. I like to pull the select all. Listeners, it's up to you how you like to view these. I like to see everything at one glance. But hey, that's me. I'm crazy that way. Coming into the showtime, the Euro USD at about 1.81 puts it off about 0.2% on the week. Not a huge week out there in FX land. If you're wondering, about 42,000 contracts on the tape in the Euro USD. DECE is where most of the paper was this week, 42.5% of the paper going up. Let's see here. The vol, if you're wondering, by the way, again, volume's a little light out here. The vol is a little light. The vol on this DECE contract is a 6.25. And it's off 0.75 point as well. Remember, that election was an earnings event for pretty much most of the market. And so we saw a lot of that event risk coming off, and it's being reflected here as well in Euro USD, off about 0.75 point, still about 6.25, so got a little bit of juice left, but 0.75 point when your vol was only about 7 to begin with. That's a pretty big vol apocalypse out there. Let's see how that's looking from a skew perspective. A little bit of a change out here. The puts were about 0.5% bid last week. This week, 3.6% cheap. But again, you're only talking about a 6.25 vol to begin with, so 3.6% on top of that. Not a huge move in either direction. The calls 1.2% rich last week. This week, double that, 2.4% rich out here. Let's see. Number one with a bullet, the big trade out here in Euro USD. Pretty much slightly out of the money calls. The 1.19 calls doing a whopping 1,700 contracts. Listen, again, it's a little bit lighter contract. Some of the other ones we talk about. Followed hot on its heels. Let's see. What was number two out here? It was the 1.2 calls, 1.2 even calls out here as well, with about 1,245. By the way, the big day on the 1.19 calls was on Tuesday with about 1,100 going up. A good chunk of that opening. So opening near term out of the money calls here on the Euro USD was the order of the day. Let's see if we see any weird prints out here as well. Quick scroll. Again, that's why I like to hit select all, listeners. It allows you to see if any of those funky prints are slipping into the radar. Not so much, which is kind of surprising. And I know they weren't in our top movers and shakers this week. A lot of people like ags. We have talked about them a bit recently. And CME is coming out with their numbers for their big ag reports.
It's time to get our hands dirty exploring the latest options trades and trends in corn, wheat, soybeans, and more. It's time to talk ags.
Interesting highlights out there. Let's hit a couple of them really quickly, including the beans, the soybeans. Maybe we'll hang our head out there really quickly next as well. Go to the ag drop-down, listeners. Go to grains and oil seeds, and go to the beans. We're not going to the meal. I'm not going to the oil. We're going straight into the beans themselves, listeners. If you're wondering, the Dec Implied Volatility out there is pretty much, you have to go all the way back to 2014 to find another month that was higher. So coming into, as of this report, this is, again, their average December implied vol. And again, this was priced in, this is from last month, so October. So what they're pricing for Dec in October. So bear that in mind. But you have to go all the way back to 2014 to have it be higher, 24.4 back then. Coming into this report, it was almost a 21%, 20.8. So that's markedly higher than about the 15.5% it was last year, the 16% the year before that, about 12% back in 2017. So a little bit of juice percolating out there in those ags. Some other interesting highlights in the ag complex here. The entire grain and oilseed complex, Dec implied vol, was hitting levels across the board. So not just in soybeans, but the entire complex. All of them hitting vol levels they haven't seen since back in 2014. So it's been quite a while since we've seen this much juice out there in the ags. They also talked about their ADV out there in the weekly options, which is, again, not a huge area usually, For the ags, you see that big in, of course, the equities and a few other complexes. People really love to hang their hats in the weeklies. We talked about it before, non-existent in crude oil for whatever reason. Still a mystery to me. But in the ags, ADV of the weeklies up to about 12,000 contracts in October. KC wheat options volume up 68% year over year, and 20% of that coming in the non-U.S. options, non-U.S. trading hours. And interestingly enough, pork cutout options were launched on November 9th. It makes me hungry. Makes me want a little bit of maybe a pork chop later on the show for lunch. Really quickly, let's break down a few of these complexes. These are the October numbers that CME just put out before the show. Corn ADV in October, 131,000 contracts. It's up 42% year over year. Soybeans, 85, almost 86,000. That's up 69%. The Chicago wheat, 36,500. That's up 82%. Hogs actually off 45%, only 8,000 out there, which is kind of interesting. Soybean meal, 16,500, up 112%. Soybean oil, 13,200, up 79%. Ag weekly option, I guess that's across the board. They're up 100%, about 12,000 contracts that we just talked about there. That's a pretty big lift. The KC wheat up 68%. Short dated new crop options up 143%. Granted, from a smaller benchmark, only 1,500. Class 3 milk still struggling, 1,800 contracts, only up 1%. And feeder cattle up 32%. So there's your ag breakdown. All you ag heads who keep writing in, you want more ags. There you go. Let's dive into one of the big dogs here we just talked about, soybeans. Coming into showtime, 1146, up 44.5 handles, or about exactly 4% on the week. So a good run here in the beans this week. You know, the possibility of a pandemic vaccine, of course, lifting hopes for consuming agricultural products again across the board, and shipping products to other countries again, and all sorts of things that have been under this just sort of Damocles ever since this pandemic descended upon us here. Let's see. The big, most active contract was Jan, 37.3% of the paper going up out there. If you're wondering, that Jan contract in soybeans is almost a 20 vol, 1996. That's off about a point from last week. So it was a 21 last week. So that's a decent bit of vol here for the soybeans contract. And as we just talked about, you have to go back to 2014 to see levels like this again out here. So pretty juicy time from a vol perspective out here in soybeans. Look at the skew here. The puts last week, 9.9% rich to the at the money. This week, 14.5% rich. Calls, 10.8% rich to the at the money last week. This week, 12.8% rich. So calls getting bid, I should say, and puts were offered. Puts were 9.9% cheap last week, 14.5% cheap this week. So puts offered, calls bid out here. The most active contract looks like it was the 1,200 even calls, doing about 21,000 contracts. If you wonder, by the way, almost 600,000 contracts on the tape in soybeans this week. So a very active week. Obviously, higher vol levels translating into a little bit more action out there in the beans this week. 1,200 calls, 21,500. That's number one with the bullet this week. Kind of a tie between Tuesday and Wednesday, both doing about 7,800 contracts, both also opening substantially out there. So a lot of opening upside paper on Tuesday and Wednesday, and the 1,200 calls here in January in the soybeans. Let me drop off a little bit for number two. Actually, I take that back. Our actual number one with the bullet goes a little bit farther out. It goes out to March, and it's the 1,200 calls again with 26,000 there. So March actually taking it, not Jan, and they have about 26,250. 14,000 going up on Tuesday, 7,000 on Wednesday. So a big clip in Jan and in March of these 1,200 calls. So clearly upside was where the action was here this week. Again, kind of hard to argue given all the news we saw going on in the broader markets. Let's just do a quick scan here to see any other funky prints lighting up our tape out here this week. Anything to the downside? No, it's pretty much mostly 1,200 calls in just about every month you can look at out here, listeners. So clearly upside is the name of the game here in soybeans this week. And you know what? It's also the name of the game for you guys to take the reins of the show with your questions, your comments, your insights. It is time for your futures options feedback.
It's time for your questions, comments, and insights. It's time for futures options feedback. Submit your questions at twitter.com/options, facebook.com/theoptionsinsider, stocktwits.com/optionsinsider or via questions at theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices.
All right, everybody. Let's do it. Let's kick it off. Sean, actually, I'm curious to get your thoughts on this. The last time you and I chatted, it was during our big election night spectacular. And, of course, we've seen a lot of different events unfold in that election since it happened. In the early blush, I think maybe while you were still on the special, it seemed like Trump was surging. The futures were pricing him in. The betting sites had him at an 80+% chance of winning. Of course, we saw those odds change as the results changed throughout the week. Towards the end of the week into the weekend, it seemed like Biden was in the ascendancy and the Trump presidency was on the wane, on the decline there. So it made me wonder, you know, this is obviously a crazy year, and obviously things have happened this year that are unprecedented, well, certainly in our lifetimes. And the pandemic, obviously the big wild card that threw a wrench into everything this year. So it kind of made me wonder if we had the same players in the game and everything else the same, just without the big wild card that was the pandemic of 2020, if we thought we would see a similar outcome. Again, presuming that Biden is indeed the victor here. So I put it out to our audience. Our audience is never shy of weighing in with their opinions. We don't like to get political here, and this is not political. We don't want people to, try to cast aside whatever subjective views you may have on the race. Just think of it from a purely analytical perspective as much as you can with this subject. Do you think Trump would have won? Do you think Biden would still have won? Or do you think we gave you a third choice? I'm done with politics. Mr. Sean, I'm curious, A, what is your vote if you have one? And then B, what do you think our audience voted for before I reveal the results to you, sir?
If there wasn't a pandemic, the economy would have been in incredibly fantastic shape. Unemployment at historic lows, our markets at historic highs. We'd probably have, much less volatility. Volumes wouldn't be as crazy, insane, and fantastic that we've been seeing. There would be really nothing to complain about. So I would say people aren't going to be looking for change. My guess is people would have said Trump would win.
Yeah, it's kind of hard to argue with that analysis. The market would still be going. Market's going up now, so it certainly would be going up in a non-pandemic year, and that's usually a big factor for who stays in office, the economy, of course. And so, yeah, our audience agreed with you. They said 56.7%, Sean, said Trump would win. 29% would think Biden would still win. And only 14.3%, I thought this would be higher, Sean, said, I'm done with politics. I thought there would be like 60 or 70%. But no, only 14.3%. Does that surprise you, Sean?
It does. I don't talk politics a lot, but we are a really divided nation, right down the middle. I think people are politically fatigued with the division. So yeah, I'm surprised that number wasn't higher.
I'm certainly with you there. A lot of fatigue floating around, no matter which side of the aisle you find yourself on these days. All right, next up, let's go to the futures options land once again, away from the realm of politics, at least for now. From Noob. Noob wants to know, how can I judge the liquidity, open interest / volume of options on futures? I'm interested in FX, but my broker doesn't have much info. Well, you came to the right place, Noob. Usually this is where I can point you to different portals or different platforms, but here I can actually recommend our own report that we create specifically for the listeners of this show. And you know what? Spoiler alert, don't tell anybody, Noob. It's probably better than most of the info you're going to get at most of your brokers out there. This is the stuff straight from the horse's mouth. So, for example, you say you like FX. You can go into our TWIFO or /TWIO report. Those are the free versions. You can head on over there to cmegroup.com/TWIFO. It will give you that snapshot, that this week in futures options report. All the things I'm talking about here, the volume, the volatility, the hot strikes, all that good stuff, the skew changes, the shift and slide in the skew, all that stuff we're talking about and a lot more is all broken down. The total volume for the week, how much is actually trading, which is a huge indicator for how liquid your product is. If you go looking, and unfortunately with FX, we talked about this with Craig on the show a couple weeks ago, and his recommendation is what mine is as well. If you're starting with FX, you got to go Euro USD. That is definitely far and away the deepest and most liquid of these contracts. If you want something approximating maybe some of the liquidity you're used to in the equities, some of the other products you're trading, maybe Euro USD is definitely your best starting point. It's also one of the more widely followed pairs. So you can maybe make a little bit more sense of it. You start getting out into other things like, I don't know, the yen or things, and the volume falls off a little bit, and as a result, the liquidity is less. So you may have some of the challenges that you mentioned. But our report will break it all down. I'm going to pull it in right now. Let's see. Let's go back. We just had it up a minute ago, Sean. I should have left it up. But foolish me, I switched to other products like soybeans. Let's go back to Euro USD right now. And you can see all of this for yourselves here, listeners. About 42,000 contracts on the tape. Doesn't sound like a lot, but in the FX land, that's actually pretty high. And then we got what's contracts are trading, what's the hot products, where the skew is, where the vol is. These are all things you need to know if you're going to be trading these products. And it sounds like you don't say who your broker is. It sounds like your broker doesn't have that. You may also want to look into switching brokers, by the way, as well. And if you're going to trade these products more actively, I encourage you and anyone else out there who may be listening, you can upgrade to a more premium version of these reports from the folks over there at Bantix. And if you're going to trade these, I encourage you to do that, because this is kind of the only game in town when it comes to these kinds of analytics. On the equity world, Apple options, there's a lot of places you can go to get information on that. Futures options, there really aren't that many. This is kind of, I think their tagline is all the info you need to know in one place, and that's kind of really it. You can't really find this pretty much anywhere else. If you're going to be trading these noob or anybody else out there, you listen to this show, so I'm probably assuming that you are, then you definitely, at the very least, should be kicking the tires on the free version. And if you like it, you want to see more, you want to be able to click in like I do, look at the strikes, look at what's going on, explore some of the other things, like I do the market scan, the movers and shakers at the beginning of the week. That's a premium feature as well. So those things require a little bit more effort on your part to do, but definitely noob, I would recommend you check out our reports, because the base report, you can't beat the price. It's free, and that will at least provide you with a little bit more insight. If you're looking at some FX pair and it does 1,200 contracts a week, yeah, you're not going to find a lot of liquidity in that. I hate to break it to you. But Euro USD, you can have a better shot, and you can break it all down for yourselves over there, at least starting for free, and then you can upgrade to the premium version out there. All right. I don't know, Sean, anything you want to add there for noob who wants to know how he should go about judging the liquidity, open interest, and volume of options on futures, sir?
I think his name is Newbie, not Noob. I'm just saying,
That could be. We can go for it. I'll take either one, sir.
Great question. And I couldn't have given a better answer in terms of where to find volume and open interest. TWIFO is the place for all of that information, folks. So just follow Mark's lead there. It's a fantastic resource for everything you're looking for in terms of volume, open interest, pricing, skew, vol analysis. TWIFO is where it's at. I'm seconding your comment and agreeing with you there, Mark. But I hope that helps newbie out.
Yeah, it's not always I get a chance to recommend one of our own reports generated for our listeners, but in this case, that is the case. So take advantage of it. At least to start with, it's all free. So go kick the tires if you haven't done so already. CMEgroup.com/TWIFO or /TWIO. Our next up, Micah. This would have been a good one to have last week when Tim was on the show. He wants to know, are there plans for an ETH option at CME Group? All of you out there listen to our Crypto Rundown show, maybe you don't. ETH, of course, is Ether. That is the number 2 cryptocurrency out there in terms of volume, and certainly from an options perspective, also the number 2 out there to Bitcoin. They have talked about it in the past, and again, I'd like to have Tim weigh in on this because he's the guy who's be doing it over there. But they have mentioned a while ago plans for an ETH future. Seemed like they tabled that when they started really doubling down on the Bitcoin options, which is what I kind of wanted them to do. I didn't want more futures. I wanted options on the futures they already had. But now that they're both kind of trading it up pretty well, the option's still growing, but getting there. I wouldn't be surprised to see new products on the horizon. I definitely think they're going to start with the future. You can't start with the option. And I don't think they'll launch them simultaneously. So I do think we'll see an ETH future first. As for when, I might go out on a limb and say, just for fun, I'm going to say sometime next year we're going to see an ETH future from CME. And I watched Tim come on the show in a couple of weeks and laugh me off the thing, say no way. But I'll go out on a limb just for you, Micah, and say yeah. And then once we have that, I don't think we'll have the options right away. Look how long it took for the Bitcoin options. I mean, it'll be faster than that, but I don't know if we'll have the options next year. But I'll go out on a limb and say a future this time next year. Mark it down. One of my predictions for 2021, because 2020 was such an easily predictable year. What could go wrong making predictions for 2021? All right. Next up, this is kind of touched on this the last couple of weeks. LTL wants to know, are you seeing any interesting impacts of the election on futures options? Well, we just talked about it across the board, LTL. Every product just about saw some sort of impact on it, mostly from an earnings/event risk perspective, in that we saw an inflation of vol going into the event and then a deflation of volatility coming out of it. Some of them also had commensurate large underlying swings as well. See gold, we were talking about before, and WTI, and of course the equity indices, but not all of them did. But you saw a lot of volatility surge and then just dissipation after the event. I don't know, Sean, you guys have been doing a lot of webinars about all things equities in relation to the election. Anything you want to point out in terms of interesting impacts on the election on futures options for our listener here, LTL? Maybe little.
I'm the index guy, right? So I can definitely point you to our FTSE Russell website, and there's some really good information and analysis. And Mark, I think you actually pushed this out to your listeners, an analysis of the last 5 elections and the performance of not only our Russell benchmarks, but also 10-year and 2-year and 5-year and 10-year treasuries are also part of that analysis in terms of rates. So there's quite an analysis that we put out. And I'm looking forward to having this year's election put into that same analysis as you go 30, 60, 90 days out past an election, the performance of our indexes. So it's going to be really interesting to watch. I think this year's incredibly different because we have so many other driving factors other than the election that are really a big catalyst in our market moves today. So this year, I think we're going to have an incredible analysis to talk about once more time goes on and we look at these markets as we move away from the election. Just interesting times to be part of these markets. So I hope that helps.
Yeah, 2020 is going to be the year that keeps on giving from a post-mortem's perspective. We're going to see analysis and case studies on 2020 for decades to come, Sean. Don't you agree?
I absolutely agree. Yeah, it's going to be, it's clearly one for the record books for a lot of reasons.
Yeah, we were trying to get Eric Norland from the research team over there on CME on. His schedule is pretty crazy these days. We want to get him on again, too, to kind of parse just how many crazy things they've been highlighting over there as well over the course of the year. Just a crazy year by just about any perspective. Let's wrap it up with this last one from Mandel, M-A-N-D-L. Mandel wants to know, is there ever a time when it makes sense to exercise deep in the money futures options versus selling to close? Yeah, there is. We talked about this on the show. It's been a long time now, but we have discussed it in the past. And it's a rare scenario. It might make sense for who's listening who wrote in earlier about FX, noob. That might be an area where something like this may come into play. It's typically going to happen in a less liquid market. You have an option you bought, let's say a call, the underlying rallies extremely in your favor. Congratulations to you. You made a lot of money. And now you want to get rid of that position. What should you do? Well, typically, in most scenarios, we always say it all the time, economically, it's always better. And caveat, really, it's usually better, most times, 99% of the time better, to sell that option because the option, of course, has an intrinsic value plus all the other stuff that goes on, the extrinsic value, the volatility premium, all the other juice that's baked into an option's price. If you exercise it, you lose all of that extrinsic value. It's just gone away. So you're effectively giving away that value where you could collect it if you sell it in the marketplace. Except in these rare occasions where you're trading a deeply illiquid product. And if you go to look at the market for your option, let's say the bid is now many dollars below the intrinsic value of that option. Now you might say to yourself, well, wait a minute. I don't want to sell it there. I'm giving up, $5 worth of intrinsic value that I know this option has. If I hit that bid, you could try to work it. I would certainly recommend you try that first. You try to work it somewhere, at the midpoint or close to it. Maybe you get lucky. Maybe you get filled. Maybe someone else wants to take you out of that. It depends on how big your trade is and how many are actually going up in that market at that time. But I definitely recommend you try to work it first. At the very least, try to get it somewhere around your extrinsic value. And if you can't get that done, you just throw your hands up, say, you know what? I need to take this off and I can't get it any other way. Then in that scenario, if you can exercise it and get a price that is of your intrinsic value, at least you're not giving any of that up, then hey, you're ahead of the game there. And certainly if you have a deep in the money option, you probably made some money to begin with. So maybe not the worst thing if you have to give up a little bit of that extrinsic value. Sean, is that your thought as well? You can think of some other esoteric use case where it might make more sense to exercise a deep in the money option rather than sell it, sir.
Yeah, I always think of the theoretical values of options, right? So if you're exercising a call, you're selling a put. So you got to look at the put value as well, because that gives you that juice you're talking about, that volatility, and all that other intrinsic value stuff. So if there's a big value in that put option, I would just take that into consideration when you're making a decision on the call.
Well said, sir. So yeah, some scenarios that put has a lot of juice. You are going to be giving that up, so that's to bear in mind. That put is effectively all extrinsic value. All right, listeners, so you're going to be giving that up if you exercise. So as long as you're okay doing that, then it might make sense. But again, that's a rare scenario. Don't just run out and start exercising your in-the-money calls. Try to sell them, try to work them, try to get that premium first before you just give up the ghost. But yeah, that can be a scenario you can encounter in some less than liquid names. Unfortunately, that music means we've come to the end of our sojourn through the world of futures options. Is there a product you want us to discuss on the show? Maybe you have a question for us here on the program. You know where to find us, at Options, most of the major social media platforms. Questions at theoptionsinsider.com. That also works, as well as pretty much just about every other way you can get at us. Carrier pigeons, using our app to reach out to us, the live stream, everything else. If you listen live, you ask a question, you do get bumped to the top of the list, so bear that in mind. But before we go, Mr. Sean, if folks are interested, they want to reach out, they want to talk about all the different research and studies and case studies and webinars you guys have cooking over there in the land of FTSE Russell, where should they go? What should they do?
You can reach my email address is changing, so or has changed. So you can reach me at sean.smith@lseg.com. We're our parent company is London Stock Exchange Group here at FTSE Russell. So Sean.Smith, that's S-E-A-N, is how you spell my name, Sean.Smith@lseg.com. And again, a fantastic webinar came out yesterday. I'll push this out to you, Mark, so that you can send it on to your folks, but be on the lookout for that. But go to our website, FTSERussell.com, and it's all there, /webinars. You can find all this fantastic information. But if you just go to FTSERussell.com and scroll down, you'll see all this market analysis in regards to the elections. It's all it's all right there for you to just click on. So enjoy that. And of course, if you have any questions, you can always reach out to me.
I guess your old email address was too easy, too memorable, sir. They had to make it a little bit harder, a little bit longer, a few extra syllables.
It still works. The old one still works. So if you reach Smith at FTSERussell.com, don't you worry, it'll get to me.
Well, there we go. Good stuff. And, of course, check them out over there, FTSERussell.com, for all the webinars and the links and the studies. They still have that big COVID impact site, and it sounds like a lot of people are awakening to the vol out there in small caps and some of the interesting things going on out there. If you're one of those folks, FTSERussell.com. Give them a follow on the old Twitters as well, at FTSE Russell, FTSE Russell. You know where to go to get all of our reports and all the research over there. CMEgroup.com is the place to go for all of that. And on behalf of myself and Mr. Sean and our friends over there in CME land, I want to thank all of you out there for downloading, streaming, subscribing, for sending in so many different questions. We love hearing from all of you. And we'll see you back here tomorrow, live noon Central, 1 p.m. Eastern for Volatility Views. Then it all kicks off again on Monday with another episode of the Option Block all the way through to Thursday. Another episode of This Week in Futures Options.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. Investors in the U.S. and around the world are using FTSE Russell indexes to benchmark their investment performance and create investment funds, ETFs, structured products, and index-based derivatives. Many Options Insider Radio Network listeners will be familiar with the Russell 2000 Index. Russell 2000 futures and options are currently trading on the Chicago Board Options Exchange and CME Group. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.